All right, I've got 6:03, so we can go ahead and get started. Anyone else who joins, they'll be able to get caught up. First of all, thank you all for being here. This is the United Way Mid-South Free Tax Prep Returning Volunteer Training. So that means everyone here, y'all have done at least 1 year volunteering with us before, and you decided to come back for another year. And truthfully, that is such an
Thank you.
important metric to us because that means not only, are our clients benefiting from the service and having a good time and, getting what they want out of that, but also that our volunteers and the people who are, serving the communities with us are getting something out of it to where they want to keep coming back and being involved in that.
Sir.
And that just means a lot to us at United Way. So just thank you for being here. Thank you
And
for
your onion.
committing to doing another year of free tax preparation with us here at the United Way of the Mid-South. And we're just really, really excited that you're coming back. Um, so can everyone see my screen, the agenda?
Yes.
Can you make it a little bigger?
Yes. Can you
Oh
make
wait,
it
hang on.
big?
I can't hear anyone. Give me 1 second. Let me see what's going on my end. Hello, mic check. Okay, give me 1 second. Sorry about that. All right, somebody say something to me.
Hey, how you doing? Could you make the screen a little larger?
Screen larger, like okay, yeah. Give me 1 second. Thank you, Miss Karen. Here we go. Like that.
Beautiful.
That's good, real good.
All right, good deal. So this is tonight's agenda for our training. So we'll do welcome introductions, then we'll cover the responsibilities as a VITA program volunteer. We'll take a look at volunteer roles, and then we're going to take a look at the filing season 2026 changes. We're going to take a look at the One Big Beautiful Bill changes, along with other changes that have taken place from last year that we need to be aware of going into the 2025 tax year filing season. We've got different training topics we're going to look at, as well as taking a look at refundable and non-refundable credits. And then we'll take a quick look at taxpayer requirements when they visit our site, as well as volunteer tools and resources that are always available to y'all, making sure that you're familiar with those, knowing how to find those. And then we will take a look at the 3 certification tests for this year's advanced certification, the volunteer standards of conduct, intake interview and quality review, and the advanced tax exam. So going back up, welcome introductions. So if you don't know me already, my name is Hunter. I've been with United Way going on about 3 years now, and I've been doing VITA in Memphis. I think this is my 8th year doing VITA in Memphis, so I'm really excited to be here. I really, really care about this program, and I care about the way that it impacts the Memphis community. And then I will stop talking for a minute and let our other presenters introduce themselves tonight. Miss Karen, Miss Denise, any of y'all want to say a few words?
Hey, good evening. I'm Karen Smith Clark. I've been with VITA over 40 years. I don't forgot now how many, but it's close to 50. So you can tell that I love what I'm doing. I've been here so long. So I just want to welcome you and we'll get started in a minute.
Good evening, good evening, everyone. This is Denise Williams. I too have been doing VITA over 40 years. I am the site coordinator at the headquarters location. I welcome you. We're so glad to have you here, and we hope that we have some good things that you want to hear to help you make it throughout the year. Thank you.
Thank you all. All right, well, let's go ahead and get started taking a look. Who's scribbling on my agenda? What is this? Anyway, let's take a look at the responsibilities as a VITA program volunteer. So let me stop that real quick and share a different screen.
Yeah.
All right. All right, so this is the Pub 4961. This is the Volunteer Standards of Conduct and Ethics Training. This will be the publication that'll, have all the information you'll need for your volunteer standards of conduct test. But to start things off, we're going to take a look at the Volunteer Protection Act. So I'm going to scroll down to here. All right, so the Volunteer Protection Act, Public Law 105/19, Volunteer Protection Act of 1997, generally protects volunteers from liability for negligent acts they perform within the scope of their responsibilities in the organization for whom they volunteer. The Volunteer Protection Act is not owned or written exclusively for Internal Revenue Service. This is a public law and relates to organizations that uses volunteers to provide services. So essentially, the Volunteer Protection Act is important to know and important to have a refresher on, because essentially it is a thing that protects us as VITA volunteers from any liability, so long as that we are doing our due diligence and operating within our scope of service, which we will talk more about. But that's a very important reason why we want to abide within the rules that the IRS gives us, because by doing so, we remain covered by the Volunteer Protection Act. The purpose of the Volunteer Protection Act is to promote the interest of social service programs. To promote the interests of social service program beneficiaries and taxpayers, and to sustain the availability of programs, nonprofit organizations, and governmental entities that depend on volunteer contributions. It does this by providing certain protections from liability concerns for volunteers serving nonprofit organizations and governmental entities. It protects volunteers from liabilities if they were acting within the scope of the program and harm was not caused by willful or criminal misconduct, gross negligence, reckless misconduct, conscious flagrant indifference to the rights or safety of the individual harmed by the volunteer. The VPA does not protect conduct that is willful or criminal, grossly negligent, reckless, or conduct that constitutes a conscious flagrant indifference to the rights or safety of the individual harmed by the volunteer. So all that to say is, if we are doing what we are supposed to be doing within the rules that we are supposed to be operating, then we are covered from liability. This does not protect you if you decide to steal money from taxpayers or steal, break the law or steal their private information or anything like that. It does not protect you from that. But if we are operating in the way that we're supposed to, doing what we're supposed to, then you'll be covered from any liability from anything that might happen. Let's see, volunteers must only prepare returns that are within their tax law certification level, their site certification level, and the level of certification under the VITA TCE program. This is why we really push for the advanced certification for all of our volunteers, just to keep a lot of things standardized, and just, that way we all have a clear idea of what is within our scope and what we are covered to do under the Volunteer Protection Act. All right. So I'll stay on that. Then we're going to take a look at the volunteer standards of conduct themselves, as well as the quality site requirements. So the volunteer standards of conduct, there are 6 volunteer standards of conduct that we must always abide by. Number 1, follow all quality site requirements, or QSRs, and we will talk about those more in a minute. Volunteer standards of conduct number 2, do not accept payment, ask for donations, or accept refund payments for federal or state tax return preparation from customers. So, pretty straightforward. We are a free nonprofit service. We do not accept payment. Occasionally we'll get people who are just so happy and grateful for the service they receive that they will really, really push to give us a tip or some kind of compensation. We really appreciate that. That's a very lovely gesture. We cannot accept the money. Doing so violates the standards of conduct and thereby violates, our continuation of the program, us continuing to receive grant funding to sustain this program. Any violation of these standards of conduct puts all that into jeopardy. So as much as we are appreciative that people enjoy our service, we cannot accept payment for it. Volunteer standards of conduct number 3, do not solicit business from taxpayers who help or use the information you gained about them, taxpayer information, for any direct or indirect personal benefit for yourself, any other specific individual or organization. So basically what this means is just, if people are going to be sharing their private information with us, that is a necessary part of doing taxes. And we are obliged to make sure that that private information that they do share with us, the things they do disclose to us, is only used for taxes. We cannot make like if you have your own business and you see that someone's got an issue going on where, I don't know, say they're paying someone a lot to do their yard work and you do yard work for less than that, you cannot say, hey, I've noticed you're paying someone a lot to do yard work. I do yard work for less than that. We cannot do any business plugs, any recommendations, anything like that based on the private information that they are sharing with us. It has to strictly be used for their taxes and for that return only. So moving on to volunteer standards of conduct number 4, do not knowingly prepare false returns. That's pretty straightforward. Please do not commit tax fraud. Like we talked about being covered by the volunteer standards of conduct for any mistakes that might happen on a tax return. So long as we are operating within our due diligence, we are covered from liability by the Volunteer Protection Act. But if you engage in fraud or you knowingly put false information on a return, that is not covered by the Volunteer Protection Act, and that also violates the standards of conduct. Volunteer standards of conduct number 5, do not engage in criminal, infamous, dishonest, notoriously disgraceful conduct, or any other conduct considered to have a negative effect on the VITA TCE programs. So again, this one is also pretty straightforward. Please do not do anything that the IRS would consider notoriously disgraceful. I don't know what a clear example of that would be, but I think it's kind of one of those things you just know. Yeah, please do not engage in any criminal activity or anything infamous or dishonest or anything that can have a negative effect on VITA. Now, that's not to say, we work with a lot of people. Sometimes you might deal with difficult people. That's not to say that you just have to sit there and let someone, be rude to you. But, there are ways to handle conflicts like that in a professional and courteous manner. Please, don't do anything that's considered notoriously disgraceful. That's how the IRS puts it, and I will leave it at that. And lastly, the last volunteer standards of conduct is to treat all taxpayers in a professional, courteous, and respectful manner. Again, that's kind of going back to point number 5, but just we're going to work with a lot of people. Y'all have all done this before, so y'all know we work with a lot of people in a variety of different situations and people with a variety of different moods and stuff that they're dealing with. So, a lot of people are going to be very happy, very appreciative, very grateful. And other people just might be having a rough day. Sometimes you have a bad day when you're doing your taxes, and it's not our fault. They know it's not our fault, but we're the only people that are there. So, sometimes we just have to be the ear that listens to that. And just when we do that, make sure we're always keeping it professional, keeping it courteous, and being respectful. Failure to comply with all these standards of conduct could result in the removal from the VITA TCE program, deactivation of our EFINs, the termination of our sponsoring organization's partnership with the IRS, or referral of your conduct for potential TIGTA and criminal investigations. So, the main thing is if we are caught violating these, and that really jeopardizes the future of the program, and we certainly don't want to do that. So please be sure to always adhere to these 6 standards of conduct. They're very important in doing what we do here with VITA, and it's something that we all have to do. So we talked about the first standard of conduct here where it says follow all quality site requirements. So let's take a look at what those site requirements are. This is publication 5166, where we can look at those 10 quality site requirements for all VITA TCE sites. Okay, quality site requirement number 1 is just certification. All of our volunteers must be certified through the Lincoln Learn Taxes platform. So that includes all the certifications such as the volunteer standards of conduct training, the intake interview and quality review training, and the VITA TCE tax law training. So that's why, every year we have all of our volunteers take those 3 exams. I know that it can get tedious doing this multiple years and having to take the advanced law training or the advanced law exam for multiple years. But, you just kind of get used to it, and it's important that we do this each year because that is a quality site requirement that everyone renews their certifications annually to keep up with any tax changes. And that we have to make sure we're always operating within the scope of service for our certification levels.
Because that's what I mean to say.
Quality site requirement number 2 is the intake, interview, and quality review process. So this is essentially just, hang on one second. So this is essentially just making sure that we follow the proper process for conducting our intake process and our interview, making sure that we fill out that yellow form in its entirety and all the places that need to be filled out, making sure that things are not left marked as unsure or things are not left blank by the time that the interview process is complete. Making sure that coordinators, return preparers, quality reviewers, and instructors all take intake and interview and quality review process training and complete that certification exam. Let's see. All sites must use the approved current year form of the form 13614C, which we will provide to all of our sites.
When I tried to first got the computer,
Let's see. So following the intake process, the three parts of the tax preparations process are the intake process, the interview process, and the quality review. So the intake is essentially just completing that yellow form, that form 13614C in its entirety. The interview is kind of where we talk to the taxpayer through that completed yellow form, clarifying any questions, marking anything that was still marked as unsure or left blank to the correct answer. And making sure that we go through the entirety of the 13614C to verify those answers with the taxpayer. And lastly, the quality review is when we'll go through, it'll be a different individual than the person who put in the information into TaxSlayer. They'll verify identity, confirm taxpayer identification number for a second time, and advise the taxpayer on their responsibilities for the information on the tax return. Quality review methods. There are two acceptable methods of quality review. A designated review, where someone is designated as the quality reviewer at that site and they're actually not involved in doing the data input into TaxSlayer, but their sole job is designated review. And then peer-to-peer review, which is the one that we usually use at our sites, which is where just an IRS tax law certified volunteer preparer, they do quality returns of another preparer when the site is not able to do the designated review. So essentially just having two sets of eyes on everything. So one person is responsible for the initial input of the return into TaxSlayer, and then having a second person who has also completed their certification exams. They perform the quality review. That way it's not one individual. Self-review is never allowable. It's got to be either designated review or more commonly peer-to-peer review, where you have to have two sets of eyes on everything, and the person who initially did the return is not the one quality reviewing it. Quality site requirement number 3, making sure that we confirm photo identification and taxpayer identification numbers. So make sure, we're doing that for every return. Make sure that we're getting eyes on that they are the actual documents themselves. So the process must include using acceptable documents to confirm taxpayers' identities and their identification number by reviewing original photo identification for the taxpayer and the spouse if they're married filing jointly. And then we have to make sure we look at Social Security cards or ITINs for everyone listed on the tax return. So taxpayer, spouse, if married filing jointly, and any dependents being claimed. Essentially, if their name is going on the tax return, then we should be able to verify their Social Security card. Just making sure that we look for correct spelling of the names for everyone listed on the return. Reference materials. So quality site requirement number 4 is just having the appropriate reference materials available at the site. A lot of these are available digitally, so we have them easily accessible on all the computers at our location. You've got the Pub 17, the Pub 4012, the Pub 4299, as well as volunteer tax alerts as we receive them, or quality site requirement alerts, or any cyber tax alerts issued by TaxAid. So just making sure that you know where your reference materials are, that they're easily accessible, and that they are actively available on site at any given moment. Quality site requirement number 5 is making sure that we have the Volunteer Standards of Conduct Agreement. So that's the form at the end of Lincoln Learn after you complete your certification exams. It'll let you electronically sign that form 13615. And then, those are the ones that we request that you send to me or to your site coordinator. We have to have those on hand for every volunteer who volunteers at our sites. That's kind of the documentation that if we ever are having a site review or being visited by someone conducting, a secret shopper, then they will want to see our volunteer agreements for all the volunteers who are at that site. It's very important that we receive these prior to actually doing your volunteering. That's kind of like the last step before you have the green light to actually begin serving at one of our tag sites. Is we have to have that signed form and make sure that we have access to that at all times. That way, if there is a secret shopper or there is a site review and they need to see that we know where to find those at the site, how to present those. Your site coordinator will be able to do it, or we always keep those digitally as well. So just making sure that you turn those in as a volunteer and give them that to your site coordinator at the site when you arrive. If you volunteer at multiple locations, make sure you print multiple copies of this, because each time you volunteer at a new location, if it's your first day at a new location, you'll need to give your volunteer agreement to that site coordinator, because they'll need to maintain it for that location for you being a volunteer there as well. Quality site requirement number 6, timely filing of tax returns. This is just really important because we don't want anything to just kind of get stuck in the queue. So we want to make sure that we are filing returns, electronically filing them at least by the end of the day. And if they, following to make sure that they all get accepted. If they get rejected, making sure that we follow up with those taxpayers and resolve the issue, ideally within 48 hours of the rejection. Just because, if we're not staying on top of that, it's really easy to kind of let that go on, and then suddenly, we have all these people in a queue where their returns are kind of in a state of limbo, where either maybe they've been marked in TaxSlayer to where they were somehow forgotten to be filed initially, or they've been rejected and just there's been no follow-up. And in those situations, we have a lot of people who end up calling me or Matt or someone in the office saying, "Hey, I filed my return 2 months ago, but I haven't gotten anything. What's going on?" And then we have to look it up and say, "Oh, actually your return was either never submitted or it got bounced back to us and no one contacted you." And those are not the most fun conversations to have. So we try and make sure we follow up with any rejections within 48 hours if possible, and making sure that we do our electronic filings for any returns that are ready to be filed at the end of the day before we close down the site. Quality site requirement number 7, the civil rights, just making sure that we have our civil rights posters posted at the tax sites. Someone's scribbling again. Making sure just we have our signage posted. Y'all at all the sites will have the civil rights poster, and just making sure that we have that in a place publicly available where it can be viewed easily by taxpayers at our location. Quality site requirement number 8 is using the correct site identification number. You will all be doing that. We've all set all that up, just to where that should match whatever site identification number is assigned to a site will be the correct one at the site you're at. I guess, if you volunteer at multiple sites, maybe the application there is making sure you're logged into the correct TaxSlayer account for the site you are at. That way returns don't get lost at other sites' TaxSlayer servers. But outside of that, y'all won't really need to worry about that. Same thing for quality site requirement number 9, the correct electronic filing identification number being used in the returns. All of that has already been set up within TaxSlayer. So if you are logged into the correct TaxSlayer for the site where you're at, that'll all be taken care of, and you'll be using the correct SIDN and the correct EFIN. And lastly, security, privacy, and confidentiality. So they're just having a copy of that available at the site, and that again is accessible digitally. If you ever need it, if your site coordinators should have it, if they ever need it and for whatever reason they don't have it, we can provide that. But that's all available. All of our security documents are done, and we have all that. So just if that's ever needed at the site, we can provide that. Oh, and also making sure we keep our data secure, making sure that we have passwords on all our computers, making sure that we are not actually downloading taxpayer information onto the hard drive. We try and keep everything within TaxSlayer. We don't want files actually downloaded onto the laptops. Our laptops are rental laptops. And while we will check them and try and catch everything when we return them back in at the end of the filing season, just as a rule of safety, security, privacy, and confidentiality, we encourage everyone to not actually save those documents on the computers themselves and just keep everything within TaxSlayer. Making sure the Wi-Fi's we use are password protected, and making sure that we're securing all the computers, printers, and all the other equipment. Make sure, if anything does get stolen, making sure that you report that immediately. But outside of that, just be careful, like with that information, because it really, we don't want any computers to be stolen, obviously, but we also don't want the data on that computer to be stolen, especially when it's a lot of confidential data for a lot of people who are trusting us with this service. So just making sure, keep an eye on things, make sure everything's locked down, and that we are upholding just privacy and confidentiality in the way we carry ourselves. And that's it for the volunteer standards of conduct and the quality site requirements. Are there any questions about those? We have the 6 volunteer standards of conduct and the 10 quality site requirements. Are there any questions about those before I hand it off and we move to the next section? All right. Well, if there are no questions, then we can go ahead and move on to volunteer roles. Ms. Denise or Ms. Karen, I'm not sure who's got that one.
Okay, I have that. I'm making an attempt to share a document. And it says share at the top of it. Is that where I hit the share button?
Is it like the green arrow pointing up?
It's at the bottom, Denise.
I don't see a green button.
It's a green with an arrow in it.
Well, that's what I thought, but it's not. I
At
don't see.
at the bottom.
Yeah, the one I see down here that's green is the battery.
Oh, wow.
Yeah, I've been searching for the last, I don't know. So anyway, I'm just gonna go ahead on and read it because we don't want to prolong. We got a lot to cover. These are the volunteer roles. Of course, the first one is the greeter. The greeter's responsibility is to welcome everyone visiting the site to create a pleasant atmosphere, making sure they know where the bathroom is, as well as making sure any disabled person is accommodated as much as possible. Next, Form 13614C and or if needed, 14446 should be given to the client to complete along with a pen or pencil. Next is the screener. The screener works with the taxpayer to determine the type of assistance they need. They verify the identity of the taxpayer using and confirm that they have all the necessary documents to complete tax returns that are within the scope of the volunteer program. You will review the completed Form 13614C to ensure that all answers reflected on this form match the tax documents provided by the taxpayer. The Form 14446 form has been completed and signed if being used, and that all documents needed to prepare that return are accurate. You make certain that unsure answers are changed to yes or no by asking the client additional questions. You may have to ask them questions that they have not completed, such as about any unreported income that's not on that form. The tax preparer is a tax preparer you complete and successfully certify in tax law training, including the use of electronically filing software to provide free tax return preparation for eligible taxpayers. If there is a discrepancy, the preparer will call the taxpayer for clarification if they left their form for virtual preparation. As a site coordinator, you must verify that all volunteers are properly certified to work at the sites. You create a process to verify the level of certification for each volunteer and that they have passed and signed Form 13615 Volunteer Standards of Conduct, which is then signed by the coordinator. The coordinator must also confirm the volunteer's identity using government issued photo. Develop and maintain schedules for all volunteers to ensure that there is adequate coverage, supplies, and equipment at your site. The quality reviewer, as a quality review, you review tax returns completed by the volunteers, ensuring that every taxpayer receives top quality service and that the tax returns are error-free. You must be tax law certified at least at the advanced level or the military level if you prepare those returns at your site. And those are the roles of the volunteers. Are there any questions? All right, we got some good people here. So it's between you and I don't know which one of y'all decide to do it. Think you got a split portion there.
Yep.
So is this where you're gonna do the big beautiful bill,
I'm
Hunter?
gonna try. I'm gonna try. We'll see how it goes. All right, so we're going to look at the filing season 2026 changes. To start that, we're going to take a look at the one big beautiful bill changes. I'm going to call it OB3. So, this is new to all of us, myself included. So we're going to go through it slowly because I'm still kind of learning this myself. So I appreciate any and all grace y'all are willing to give me as we go through this. Let's see, share this. All right, can everyone see that?
No,
No?
barely.
Oh, like I just need to make it bigger? Hang on, I can do that.
I can.
That better?
Yes.
Okay,
for me.
cool. All right,
Okay.
thank y'all.
All right.
So this is a document that kind of goes over the tax implications of the OB3 changes. It was made by Brad Martin, United Way of Southwest Alabama. So big shout out to Brad because there currently is not a whole lot of official documentation that really give a lot of detailed guidance into how this affects us, but Brad has put this together as a pretty good document for how we at least anticipate things will affect us for this filing season. So we've been using this kind of as our go-to resource for the OB3 changes, and that's what we'll use today. Okay. So, there have been changes in standard deduction. Married filing jointly and qualified surviving spouse under age 65, that is now 31,500 as opposed to 30,000. Head of households 23,625 was 22,500. Single or married filing separately, standard deduction is now 15,750 instead of the 15,000. And there's an additional standard deduction for people who are 65 or older or blind. 2,000 for single or head of household, and 1,600 for all other filing statuses. The practice lab is now using the up-to-date standard deduction amounts from the OB3. However, publication 4012 still contains pre-OB3 amounts. So yeah, ideally, everything that we're about to be talking about is going to be in TaxSlayer and automatically updating for the most part. But we still want to cover it, and there are a few things that need to be added in TaxSlayer, but I'll get to that. There's a new Schedule 1A, a new schedule for Form 1040. Schedule 1A will be used to capture the deductions covered in the following pages. As long as the schedule is a draft, it's subject to change. You can see the latest revisions on their website. The deductions captured on the Schedule 1A are not above the line deductions, meaning they do not affect taxpayers' adjusted gross income. These deductions are taken into account after the taxpayer standard or itemized deductions and after any qualified business income deductions. So this is what it's going to look like on TaxSlayer. It's essentially the three main provisions of the 1B3 tax changes. It's no tax on overtime, no tax on tips, and no tax on car loan interest. So it'll be under additional deductions in TaxSlayer showing under Schedule 1A. The first thing to look at is the new deductions for seniors. A new deduction exists for taxpayers who are at least age 65. Schedule 1A refers to this as the enhanced deduction for seniors to distinguish it from the increased standard deductions that seniors have gotten and continue to receive if they do not itemize. It actually has no connection to Social Security income, although that is something that has been miscommunicated and people seem to think that it's tied to Social Security income. Some people are thinking that Social Security is no longer taxable, but people have been thinking that for a long time. Social Security is still taxable, and the calculation of that taxable amount has not changed. There's just a new deduction for seniors that can result in the lowering of their taxable income in many cases, whether they get Social Security benefits or not. For tax years 2025 through 28, qualified taxpayers can receive a deduction of up to $6,000 per eligible individual. This means that married taxpayers who file jointly could qualify for as much as a $12,000 deduction, subject to conditions limitations. This is on top of the usual standard deduction increase that seniors receive. So the rules for claiming this deduction: the taxpayer must have reached age 65 on or before the last day of the tax year. The deduction is available whether the taxpayers itemize or take the standard deduction. It's different from the usual expanded standard deduction seniors receive, which only applies if the taxpayer takes the standard deduction. The taxpayer must have a Social Security number to be eligible for this. The taxpayer's filing status cannot be married filing single, and the deduction phases out for taxpayers with modified adjusted gross income over $75,000 or $150,000 for joint filers. This phase out is calculated at $6 cents per dollar over the threshold amounts. Modified adjusted gross income includes AGI plus excluded income from Puerto Rico and from foreign sources. So this is what the actual Schedule 1 will look like in the print set. And you can kind of see how it calculates all that based on, them being over 65 and then phasing it out depending on what their modified AGI is. We have an example here. So Chantal is age 68. She is not married. She has a valid Social Security number. Her MAGI is $80,000. She is a qualified taxpayer, but because her income is above the $75,000 threshold, her deduction is reduced. So it's going to be $5,000 that's above that threshold. Multiply that by 0.06. So $300 is the reduction to her deduction. So her total deduction will be $5,700. So take that maximum amount of $600 and deduct it by that amount of her being over the threshold, and that's how we get that number. Since the enhanced deduction for seniors is based on information already entered into any return, like Social Security number, date of birth, income, filing status, TaxSlayer will automatically calculate any enhanced deduction for seniors and complete the appropriate portions of Schedule 1A. Not need to enter anything else for this senior deduction to go into effect. TaxSlayer will automatically do this based on everything else we're putting in, so there's no need to type in anything extra for this in TaxSlayer. And Brad said, I expect many taxpayers will want to know why they're still paying taxes on part of their Social Security benefits. It is important to explain that the taxability of Social Security remains unchanged. What has changed is that there's a new deduction to reduce taxable income for people who are at least age 65, and this provision is for tax years 2025 through 2028. And if you want to read more about this one or anything I'm talking about in this document, I did share this document with y'all via email, I think about 10 minutes before the session started. If you did not receive that and you want to receive this document, please email me this and I'll get that to you. Brad has put check your knowledge quiz questions in here that I don't think we're going to go through tonight together, but if you want to quiz yourself on any of this new information, it's in here along with the answers in this document. So again, props to Brad because this is a great document that we are using to learn about these new tax changes. All right, moving on to no tax on tips. We anticipate that this will be one of the two ones we might see a lot of this year. So although this is being called no tax on tips, it's a really misleading name that will have a lot of taxpayers confused. A better name would be no tax on qualified tips, which at least allows for conditions under which tips are eligible for a tax deduction. And it's important to understand what makes tips qualified. So here's what we think we know. For tax years 2025 through 2028, taxpayers may be able to deduct up to $25,000 in qualified tips for their income for federal tax purposes. These tips would still be counted when calculating self-employment taxes for self-employed individuals, as well as Social Security and Medicare taxes for employees. So the rules for determining which tips are qualified are as follows. Tip earners must have a valid Social Security number. In the case of a joint return, the tip earner must have a valid Social Security number to claim the deduction. The filing status cannot be married filing separately. Tips must be received for work and occupations listed by the IRS as regular and customarily receiving tips on or before December 31st, 2024. And there are tables in here that we can look at in a moment for a list of occupations from the proposed regulations. Tips must be reported on a W-2, a 1099 NEC, 1099-K, 1099 miscellaneous, or other specified statement furnished to the individual, or reported by the taxpayer on Form 4137. Beginning in tax year 2026 for filing season 2027, Forms W-2 will have special codes in box 12 to report this information, and the Forms 1099 NEC, 1099-K, and 1099 miscellaneous will have a new line listing qualified tips, but this is not expected for this current tax year, so we have to kind of do something special for this year for it. The bottom line is that taxpayers will generally need something from their employer or payer to claim this deduction. We have to have some kind of documentation showing what is overtime. We cannot just go off of their word with them having nothing supplemental to verify that. They generally will need something where they can demonstrate to us that it was overtime, whether that be like a pay stub, something from their employer, something like that. We just need to have something from their employer or payer to claim that deduction. The maximum allowed deduction is $25,000 for the year, and in the case of joint filers, this is per return, not per person. The deduction begins to phase out for individuals with a modified AGI over $150,000 and joint filers with a modified AGI above $300,000. The deduction amount is reduced by $100 for every $1,000 over the applicable threshold, but we should not see people with that income range at a VITA site regardless. Qualified tips include cash, card-based tips, and tips received under a tip-sharing arrangement. This could also be something that can be immediately exchanged for a fixed value, such as casino chips. Qualified tips do not include items such as event tickets, meals, services, or other goods that cannot be immediately exchanged for a specific cash amount, including most digital assets. Qualified tips must be voluntary and not subject to negotiation and determined solely by the customer. So for instance, automatic service charges such as those placed on a restaurant bill for a large party are not considered qualified tips because they were not set by the customer and are required to be paid. So it's got to be a voluntary contribution from a customer and an amount that they choose, not anything mandatory like that. Tips received in a specific service trade or business are not eligible for the deduction. All right, so a specific service trade or business is defined as any trade or business involving the performance of services in the fields of health, law, engineering, architecture, accounting, actuarial science, performing arts, consulting, athletics, financial services, brokerage services, or any trade or business where the principal asset of such trade or business is the reputation or skill of one or more of its employees. There are instances where a taxpayer may or may not be eligible for the deduction on tips. Take the example of a musician. The list of Treasury tipped occupation codes does include musicians, but the above definition includes performing artists, which would also include musicians. So let's look at an example where Quentin is a musician who is employed by a hotel to play music in their piano bar. He is an employee of the hotel and receives a W-2. because Quentin works for a business that is not itself considered a specific service trade or business, he is eligible for the deduction. The facts are the same as the first example, except in example 1B, Quentin is a musician who is self-employed and plays gigs at various hotels, restaurants, and bars throughout the week. He contracts with those entities. Because Quentin is a self-employed musician, his business is considered a specified service, trade, or business, and as such, he's not eligible for the deduction on tip. So it's going to be important whether, they are they a contractor where they determine, their own schedule and they contract with other entities, or are they paid as an employee and, they can receive tips as part of their employment working for that employee. So those are two very different situations. Let's see. All right, special guidance for tax year 2025. Because forms W-2, 1099 miscellaneous, 1099 NEC, and 1099-K will not be updated to include a separate accounting of qualified tips for 2025, and because employers and payers may or may not provide that information to taxpayers, following transition rules apply for the tax year 2025 only, unless otherwise specified. Rules are slightly different for employees versus self-employed individuals. Taxpayers who are employees. So any amounts the taxpayer wishes to report as tip must be included in the amounts reported in W-2 wages. So that's going to be box 1 or on form 4137. This means cash tips that are not reported in one of those two ways are not allowed to be used to boost the deduction for tips. To calculate the amount of tip income from the W-2s that can be used to figure the deduction, there are 3 options. Option 1 is to use the total amount of Social Security tips reported on Form W-2 Box 7 for taxpayers with wages of more than $176,100. Form W-2 Box 7 might not represent the total amount of tip income, but maybe the only information available that we can use. Option 2 is to use a detailed daily log of tips that can substantiate the amount of tips received if it exceeds the amount of tips reported in box 7 of the W-2. This log may take the form of a Form 4070 or similar statement detailing tips received. And then option 3, if an employer voluntarily includes a separate accounting of qualified tips in box 14 of the taxpayer's W-2, that figure may be. So essentially, if an employer is going out of their way to put that amount in box 14 so we can be aware of that, that's helpful, but more than likely it looks like in a lot of situations the only thing we might have to work with is the Social Security tips on box 7. Because yeah, like I mentioned earlier, we have to have something that we can use. We can't just take word of mouth for this. In addition to choosing option 1, 2, or 3 above, a taxpayer who has unreported tips listed on form 4137 of their tax return can include that amount as well. Even if a taxpayer's employer does not provide information about the qualified occupation code, the taxpayer is responsible for ensuring that his/her occupation is one that qualifies for the deduction. We've got some charts to help you with that. We'll look at those in a minute. So that's the guidance for taxpayers who are employees. For those who are self-employed, it's a little different. Income to be included in the calculation of qualified tips must be reported by the payer on forms 1099 miscellaneous, 1099 NEC, or 1099-K, even if those forms don't differentiate the amount of that income that represents the tip. The money has to have been reported on one of these forms. The taxpayer must determine the amount of the reported income described above that comes from tips. They may use earning statements or other documentation such as receipts, point-of-sale system reports, daily tip logs, third-party settlement organization records, or other documents that clearly indicate the amounts received as tip. And although payers may not indicate the occupation code of the non-employee in their documentation, taxpayers must determine if their occupation is one that qualifies for the tip deduction. And we've got charts for that as well. Because the Treasury Department and the IRS recognize that additional guidance may be needed to help employers, employees, and non-employees know whether or not their occupations represent an SSTB. Remember that taxpayers are typically not eligible for the tip deduction if their employer or the self-employed person is engaged in an SSTB. For tax year 2025, taxpayers who work in one of the qualified occupations listed in the charts on the following pages can assume that their employer or their own business in the case of self-employment would not be considered to be an SSPB and that they are eligible for the deduction if they otherwise qualify. This relief may be extended for tax year 2026 if the final regulations providing needed guidance have not been finalized by the end of 2025. All right, so this is a list of charts for the Treasury tipped occupation codes and the types of occupations they represent. And we've got some interview tips as well that we can go through. So again, you'll have this resource, but just to kind of give you some examples of like what tipped occupation. Food industry, dishwashers, bakers, personal care, private event planners, pet caretakers, tutors, nannies and babysitters, videographers,